Welcome to the Stock Market Ideas Podcast, where we discuss value investing and long-term investment ideas. Make sure to subscribe, and you'll get all of our most up-to-date episodes with investment ideas you should be thinking about. Here's your host, Ted Vilas.
Hello, and thank you for taking the time to join me here at the Stock Market Ideas Podcast. In case you didn't notice, it's been a while since we did the last episode, and quite a lot has happened since then. But there are quite a few ideas out there that I'm going to be bringing to you in the near future, so please stay tuned for that. And as always, I just wanted to give you a quick reminder to check out stockmarketideaspodcast.com if you're interested to see some of the resources that I use to do my research, including Guru Focus. And if you're interested in taking a look at some of the other links that I've posted to relevant information on some of the things that I've been talking about. Today's episode is a little bit unique, and while I probably won't talk much about cryptocurrencies and blockchain, NFTs, or anything like that very much in the future. And what I'm interested in is going to continue to be primarily value investment ideas. I had an interesting opportunity to have a conversation with an expert when it comes to blockchain and cryptocurrency, and I thought it would be a really interesting conversation to share. The guest that I had an opportunity to interview for this episode is KARNIKA YASHWANT, known to most people as Key. He has a lot of deep experience going back 16 years in helping many crypto startups. Through his marketing agency, he's been involved in raising over $550 million in funding and is deeply involved with blockchain adoption into new industries, going farther beyond just NFTs and cryptocurrencies. If you're interested to learn a little bit more about him, please take a look at the link in the description, and I hope you enjoy the interview. All right. Hello, Key. Nice to meet you. Thank you so much for taking the time to chat with me. It's very nice to connect with you here. How have you been?
I've been very good. Thank you for having me here.
So, I do want to preface this really quickly because, typically I'll talk a lot about value investing, long-term stock market investing. I don't think I've ever even said the words blockchain or crypto on this show, to be completely honest. But I really, I loved seeing your background and your expertise in this. So maybe this would be just a really good chance to have a conversation about that space, because it's always good to learn something new, in my opinion. So
that's really perfect. And I don't think you should have even mentioned it in the past, because blockchain and crypto, at least from my eyes, are nothing more than a technology evolution. It's an extension to what we have. Because I've been in the blockchain space for 9 years, so almost 10 years right now. And I found a lot of things interesting, and I was trying to dig into some of those things. And I realized that they are all models that exist in the traditional space. So if the people who are listening here, they already understand a lot of traditional models that's working, moving on to the blockchain or looking at it from the same lens would make so much more sense. The only difference really is the terms and the technological differences, but the foundation of what we were trying to do for all those decades and what we're trying to do now are no different.
So I wonder then, most of what I hear about crypto and blockchain is what you see just in media, regular media articles. I don't do the in-depth research that I'm sure you do and others who invest in that space. Should people think about it differently, as not just an investment vehicle or just a means of transacting? Is blockchain capable of doing so much more? And should it be thought of as something completely different than, comparing it to digital gold or currency? What's your opinion on that?
So let's look at the layers. It's not just the one part here, but the base layer of the crypto blockchain world is a philosophy. It's a philosophy of decentralization. It's a philosophy where it talks about how do you take control out of centralized entities who decide on your behalf and get that control in the hands of a person. So it's like democracy, but then a much more vibrant version of it and used in all aspects of life and in business. So the philosophy is the first part, and without understanding the philosophy, it is very hard to just speculate on the things that's running on. Above philosophy, you have the technology. And understanding how the technology works, you don't need to know the nitty-gritties of it, Like none of us understand how the monetary system in the world works. Even those who are working in the banks don't understand how money is working and how things work between all the countries. But we need to understand the basics of what that technology means. And then on
Hmm.
top of that comes the cryptocurrencies. So if you have to put it in one word, you could say philosophy is decentralization and the technology is blockchain. And on top, you have the instruments like cryptocurrencies, where the financial world and the trading and investing and all that comes up. So once we understand the difference of these three layers, we can decide to be part of the layer that makes sense to us. Because to me, the layer that made most sense is the philosophy first, and because I started living that way of life. And to me, it made a lot of impact because I'm not just a trader in the traditional Forex space or stock space and using the financial instruments in the crypto, because to them, it's the same thing. You use a bots, or use signals, you use algorithms and all of that, and you can use the same thing here. Few things differ, but it's a trading, and the trading philosophies are no different. In fact, someone coming from the traditional space, they have more strength, understanding, and fundamentals than many of the traders in the blockchain crypto space. They would perform better at times. But
Hmm.
if you're looking at it as technology, then you would be using it in your life, in your business, in more than one ways, not for the trade or speculation, but you would use it because you believe in how the technology can help your business or help your life. And if you look at
Right.
it as a philosophy, then you would move everything that you do towards that because you want to be in a world where you control your life and not let someone else or some entity control it. You
Hmm.
want to own things and you want to run things your way. You want to have the privacy. You don't want to just be just be out there that everybody pushes and moves you around. So
That's fair.
it's important to understand the layers.
That makes sense. So it really does come back to the original philosophy of decentralization and the democratization that you mentioned. How does that make it different when it comes to regulating? And I know that some people might think about this as things that are very non-complementary. But is there a healthy way to regulate that space, or to at least create to have a level playing field where some people are not taking advantage of others and that sort of thing? Just curious about your opinions on that. Is there a way to regulate it without being too centralized, if I can put it that way?
Okay. The moment you say regulation, it is to a good degree centralized there. But decentralization is the blockchain as a philosophy of decentralization here is not about forcing one way of doing something. It's about giving the choice to a user to say, okay, you want the regulated product because you feel safe there. You are okay with a compromise on the centralization aspect, and you want to work with this entity. It could be an existing bank, it could be a government. You want to use a product approved by them within their framework, which is 100% verified and in their control, and you're free to use that. You still have the problem that you're not able to do everything that you want because they still control most aspects of it. Maybe you have a little more transparency. You have some comfort of the like tokenization and having things with you, not having to go back to the entities for every single aspect of it. But still, you're sacrificing certain things for the
Mm-hmm.
regulation. But you will also have on the other side different parties who do not want to be regulated. They're okay with the risk of non-regulation. They're okay with the challenges that comes with it, but they just want to have something that they don't have to answer anyone with. And I believe the choice is up to the user. And blockchain by no means stops one or the other. It paves way for both. And now we leave it to the users to make their own choice.
Okay, that's really interesting. So I was really trying to wrap my head around this sort of discussion on regulation and where blockchain technology is going to evolve in the future, which obviously it's hard to predict the future. If I try to think about a traditional industry, think back to when cars were invented, you probably had hundreds of different car manufacturers, completely unregulated. You could start up a new vehicle brand, in your backyard in your shop or something like that, and start selling cars if you had a basic workshop. No safety standards, no standards of any kind, to be completely honest. But it evolved to a point where industry grew, demand grew, and then that became regulated to where it is today. You have pretty much very safe cars on the road, heavily regulated. How do you see that evolving when it comes to blockchain and crypto? Or again, am I kind of thinking of it in the wrong way? You know, is there going to be a future where the ecosystem will be safer, more stable, or is it going to be less risky? Do you picture it that way for the future?
I would say all of that. You would have progress happening on all sides. On one side, you have CBDC, central banks, digital currencies coming up. That is going to grow awareness on the crypto and blockchain space. Although it is completely a copy of the fiat and it's exactly the same thing, there's no difference. It's as good as the currency that you have in the bank right now. That will throw some light into the space. And then you have permission blockchains. Permission blockchains are those where you need to verify KYC and have a wallet, and they know this wallet is yours. It's just like a bank account, exactly like a bank account, but it sits on a blockchain. And these permission blockchains are great for the banks, for them to move their system to a blockchain-centric model. They are able to do their SWIFT transfers, etc., international settlements through the blockchain, which already many are doing pilot tests with, and so on. And at the same time, there is going to be a big rush of asset tokenization. Different assets like mines, metals, and I know people like the mines of silica mines and gold coins, gold companies, water tokenization, land, and many more. They're all trying to tokenize their assets and give liquid assets to a user where a global audience could right now have $100 worth of one of the asset, which is backed 1-to-1. If there is $100 sold, there's $100 worth of that asset verified by Deloitte or PwC or one of the big entities or government, whatever the case is. And that opens door to $1 trillion market on blockchain. And that's a regulated market. It is regulated or semi-regulated. It could be either way, because the moment you bring in a complete regulation, it becomes as good as a traditional product where you cannot sell it to the global audience. But there will, in the blockchain, that becomes harder to restrict, because there are ways they would circumvent that system in one way or other. And that will still open up the globe, the population who do not have access to these things, to be part of that journey. Because blockchain in one way brings equality. It brings an opportunity to everyone from privileged countries to underprivileged person, whether they have access to something or don't, whether they know a person or they don't. It gives access to a particular asset class. And that's very, very important, because growing up in my life, for many, many years, I didn't know that I could access a whole world of commodities and assets out there. And that is very hard for people from coming from 80% of the world. It is the 20-30% of the world who's making most of the financial progress. And they have all the regulated products, and that sits there. But the world is on the other side, and someone has to cater to that. And now this opens up the door, because of the way the globalization is. Any company can work from anywhere with anyone else, and the regulations will also adjust itself and find a way through this changing space and time. And these will be more safer assets, and there will be a gradient of it, less safer and even lesser safer, because now the question goes to all the entities involved in the process. Who is verifying something, who is regulating it? Because even if you think about regulation, not all regulations are same. If you look at a product regulated in Switzerland, you would look at it different from a product regulated in the US and something regulated in one of the countries that you don't know the name of, right? Just regulation is not the same thing. Regulation where matters. Who is involved in regulating? Who is a custodian? Who has verified and validated? Who is putting their name to it? There are a million combinations to what marks something safe. And what is safe to one country citizen is not safe for the citizen of another country. It's an extremely complex space. So I cannot really answer to say what is it, if the direction it's moving is going towards safety, but it's moving towards all directions. On one side, accessibility, on the other side, safety and regulation. But people would work with their own spheres. The moment the regulated products come in, billions and billions of dollars of regulated entities will flow their funds into these regulated products. Whereas on the other side, all the people who needs to access something, they will move it to products that allow them to access it. These could be the exact same product from two different companies, one regulated, one less regulated or under-regulated or not regulated.
Right. So one thing that I was starting to think about was exchanges, right? So let's talk about the New York Stock Exchange, the NASDAQ, all of these stock exchanges, which are, they have a long history. They're obviously very centralized. There's only a few of them or a handful of them. And if a company wants to sell shares, or if a shareholder wants to sell shares, typically, obviously, you want that liquidity of being on a large market, whereas looking at over-the-counter traded companies, it's more difficult to buy and sell shares, so it's less liquid. I wonder if that is going to change dramatically in the future, where there is no centralized marketplace, where if a public company, or there's no difference, let's say, between a publicly traded company or an over-the-counter company. If you want to sell shares, there's blockchain. I wonder if that is where that could be headed.
I think that is already happening quite a lot. So in the blockchain space, almost every company is a public company because they have these tokens, and the moment they release it to the public, it's traded. So they're not really the IPO process that you have, where only few companies go to the IPO stage on one side, but in the blockchain, a good portion of the companies can do that. Whether it's a good idea for them to do it or not is a secondary question. There are a lot of companies who are need not be doing it, but they still do it because there's interest in money, and that there's a flow of funds coming into it. But that is a possibility. So any company, just like they have equity, they can create tokens. There are structures called DAOs, decentralized autonomous organizations. You can use that, or you can use tokenization methods. So a company has shares, and they can issue, instead of the shares, they could issue the tokens and make it liquid and accessible in the market in a regulated fashion, and anybody can trade that. They don't have to wait for these large exchanges in the traditional world to allow them go through all those things. They could definitely take this route and become liquid and allow this larger group of audience to work with them. You already can see many crowdfunding sites and sites where people are able to join together and own equity on various companies as well. But blockchain makes that even more easier, even more liquid. Because in the world of blockchain, anybody can run an exchange. You can launch a decentralized exchange called Texas. And those are nothing but smart contracts. They don't have any assets on their own. You are trading with your asset with another person. You're literally trading directly there, and you're using that platform to trade. And nobody has to own it. Nobody owns assets. You don't need a license for it because they're only setting up an order book. So anybody can have an order book. I can trade something to you. And if we do a trade, we don't need a license to trade between us.
You don't need an investment banker. You don't need paying millions in fees just to sell shares in your business publicly.
Exactly.
Basically.
And that's changing the world, because that is the perception that the blockchain world comes in. When you own something, you shouldn't go a year of process, all those stages, to put what you own to market. If you want to sell something, you should be able to sell something. You do want to stop problems that comes there, but with control comes security, with freedom comes a risk, but it's a choice that we all have to make.
Yeah, that's a really good way to think about it. So what would you say then to people like me or others who don't know enough about crypto to, say, invest in it, if that's the biggest thing that people are doing with it? Or how should they think about it? If you're a traditional equities investor, does it affect those investments, or should people start to open up to those ideas of having, a little bit of crypto or other, NFTs, other assets, digital assets in your investment portfolio? Or is there still more evolution to take place before somebody that's an equities investor is comfortable investing?
I think there are two different areas that we could cover here. If an existing trader, someone who is an investor, just wants to diversify their portfolio, have some exposure to the world of crypto, they could just go buy Bitcoin or Ethereum, the top two, which is the the most long-standing, the safest compared to everything else in the space.
Mhm.
You could just look at it and analyze it the way you analyze your stocks. Of course, the fundamentals here are a little bit different. The market works a little bit differently, and there are different triggers that affects this market. Having a little bit of an understanding on that in as a short crash course, and just getting into those two asset classes, Ethereum and Bitcoin, and holding it as part of your diversification is the easiest, topmost layer there. But if you ask me, I would say don't invest, don't trade, get
Mhm.
into the space, understand what it is, unless and until you see how that space is able to add value to you, your business, your life. Do
Mhm.
not put a dollar into it. If you do not see a value, do not invest. Don't listen to what other people say. Don't invest because that's what your friend does, or that's what even a YouTube channel says,
Mhm. Mhm.
or that's what they hear all in the news, and because there is a craze happening. Check, study, understand, see if it makes sense. If it makes sense, try to see if you would use it yourself, that particular company or the product, because there are hundreds of products, hundreds of
Mhm.
companies. Take one company, study about it. What are they saying? Are they even making sense? Were they drunk when they were trying to write their own narrative? Is that a business case that you would use? And if it makes sense, diversify and put some investment in there in a calculated fashion. Don't jump into it. So look at it like you, as an investor, as you would analyze any startup, as you would analyze any other business. Do they have
Mhm.
ability to sustain? Can their cash flow make that work? Is their economy of how they have their tokens work? It's just like any other economy, like any other government and bank. If we see an economy which is overinflated, we are cautious. The same thing could happen within a tokens economy. Understand how those economic factors work and see if those make sense to you. If not, work
Mhm.
with a couple of friends. Maybe each of your members in your team, they have different expertise. Share that
Yeah.
and share your knowledge, share your report, share your understanding, and come up to a conclusion together and learn. And if you
Mhm.
want to start trading or investing, do a paper trade. Start just noting something down, see
Mhm.
how that performs 3 months from now, 6 months from now. If you miss one particular trend of a bull run, that's fine. You will catch another one in 2 years. But if you lose the savings of your life, you're never going to get it back.
Mhm.
So understand the space
Yeah.
and then invest in it. Understanding is the key, because the moment you understand, the moment you know what that potential is and what it stands for, there is no doubt you would actually move more into the space than the traditional space, because you see more value here than anywhere else. There are challenges, there are more challenges for sure,
Mhm.
just like the first car that came out to the car that we have right now.
Mhm.
But if you were part of the journey, probably you would have had more growth than what you would have right now. So
Sure.
the risk and reward is always equal, and evaluate it based on the risk reward ratio, if it makes sense.
Right. No, that's really really good advice. No matter what you're investing in, obviously know what you're doing, educate yourself, learn as much as you possibly can before doing anything. So, you know what I'm thinking about a lot is I was thinking about survivorship. So, when you're in any industry, you're going to have certain companies, entities that fail, go bankrupt, and that happens from time to time in every industry. Obviously, it's been a tough time for a lot of, crypto companies, businesses, different business models obviously affecting that. I wonder if every time you see, you know, FTX going bankrupt, falling apart, a business like that, does that improve the businesses that are still around? Are they learning to do things better? Are they becoming more transparent overall when you look at the companies that are surviving, that are doing okay? How do you see that? Is it becoming a better place every time a company goes bankrupt that's involved with crypto, to put it that way?
Okay. So on first, when something big like this happens, the space is small, and something of this magnitude definitely affects the space because
Mm-hmm.
it's small. And second, people are learning from it. People are taking lessons from it. They are slow to learn, as humans we are. There are things that takes time for us to learn and adopt.
Mm-hmm.
But the industry is fast moving and it's adopting fast, which is on the other hand compensating for it. Uh, but more importantly, the biggest differentiation that you've seen is that all companies going bankrupt or companies which are centralized entities. They are centralized to the extent that we don't know what's happening there. We cannot see in blockchain, we cannot see on contracts what exactly is going on unless they report it. And we don't know the structures of how those companies work. We don't have decentralized companies going bankrupt. Decentralized companies, of course, there are some hacks, and hacks make certain companies in a bad position. Algorithmic situations do burn certain companies which are algorithmically wrong, like economically structured wrong. But then most of these disasters primarily happens with centralized entities where we don't have an access or transparency. So that is a good argument for the blockchain space, because when the banks are going down or when such centralized entities are going down, decentralized DeFi based businesses are performing really good. They are there, they're standing, they are a testament of time because they are algorithmic. There is nothing that anybody can change. There is no criminal activity that can happen there. A person cannot change something for the self interest without the world knowing that something is changing. And that is the best part with the decentralized world. So it does make the argument of decentralization very strong, but it does, on one hand, affect the whole space because people bundle the whole thing as one package. It has taken people a lot of years to differentiate between. I mean, even right now, FTX is not Bitcoin, FTX is not blockchain, cryptocurrency is not blockchain, and Bitcoin is not just the only cryptocurrency out there. These are all different elements and part and parcel of the whole Web3 world. And for an outsider, the headline of the news reads, there's a disaster in the world of blockchain, and they don't really necessarily understand which part of it and what went wrong, except the fact that something went wrong.
Yeah, for sure. All they really know is crypto, something bad happened, and I don't want to invest in that. Stay away from that. And they don't want to know more, basically, for most people. Let me ask you, just last question here. What are you excited for 2023 as we come to the end of the year?
I am looking at two major areas of blockchain that are going to take good progress in the upcoming days. One, as I mentioned, is asset tokenization, and the second is business processes coming to blockchain. Basically, when I say asset tokenization, I see a world where we fix the mistake of moving away from the gold standard like many decades ago, and we go back to a world where we can say we own 10 kgs of gold, 5 kgs of silver, couple of gallons of water, and maybe 2 tons of timber. We are evaluating our assets and net worth in real assets. And I see that happening more now than any other time in history, because that is something solid, real world that the blockchain world will allow. And that those real world companies understand the potential of accessing the liquidity and accessing a larger audience through the power of blockchain. And on the second hand, business processes, that is to me like a Web 2 revolution that happened. When you saw companies moving from traditional paper world to the digital world, they started moving in modules. They had the CRM in the Web 2, and then they had their websites and sales happening in Web 2. They had customer support going on to chat support on Web 2, and they had their personal accounting thing on your mobile app. So you started moving part and parcel of the business and life to a new technology. And that's a slow transition that happened over a period of time. And it was not like moving your core business to the internet overnight. It starts with the less risky portions, and then slowly the business, the core businesses would move. And these business processes would move to blockchain separately, one by companies, either Web 2 companies coming to Web 3, or companies in the blockchain native companies coming up with new solutions of doing various activities and working with the existing traditional companies, offering them the service or a product in the process. And this too would pretty much capture massive assets that would grow the blockchain space and a scale that we have never imagined before. And they have the potential. They don't have the risk associated with that as much. And it's beautiful to see that come into life, not exactly in 2023, but in 2023, this process is already happening. We can already see companies moving towards that. Many large entities are in process to do that. And we would see this happening over a period of time, but the balls are moving.
Wow, that's fascinating. So obviously still a very fast moving space, and sounds like you're incredibly busy. A lot of amazing work that you're going to be up to in the coming year. So thank you so much. I really appreciate you taking the time to talk about this. Obviously learned a lot, and really appreciate it, Mr. Key. Thank you so much.
Sure thing. Thank you so much, and have a great time.
To make sure you get our most up-to-date stock market ideas, be sure to subscribe, rate, and review this podcast. Thank you for listening to another episode of Stock Market Ideas.